Saturday, September 30th, 2017, Monaco 64, home of alternative economics and contrarian views. So I'd like to talk about a term that Jim Rickards uses, which is ICE9. And also, I'll go into my pocketbook of gold, a survival manual for monetary mayhem book. And I'll talk also about my background, you know, where I grew up and why, you know, I think a lot of the talk about ICE9, for example, and global financial collapse, sometimes is a little bit scaremongering. It's a bit overdone. I'm not saying there aren't dangers and that when there is a collapse, that you don't need to be prepared. But what I'm trying to say is not the end of the world. And with that, I'll go into my background. So I was born in Brazil, 1964. So my dad and my mom were born in the 30s. My dad in 1932. So he always told me about, you know, how the Great Depression affected things. You know, his father had a pretty good job at a British bank in Rio. But he lost that job and then he started teaching. But, you know, and he always told us when we were growing up, because we grew up quite comfortable, that when he was younger, things weren't as easy during the Great Depression in the 30s and also maybe in the early 40s. How his mother or my grandmother used to take old shirts from my granddad and make shorts from him from the shirts, things like that. So, back in the 80s, after I'd grown up, you know, I was a young person, still at university. I used to go back to Brazil. We had a few currency collapses in Brazil. I remember there was kind of an ICE9 situation where the banks completely shut. The currency collapsed in Brazil. I think it was about 1987. And there's an interesting story about one of my uncles who's a doctor. He bought like a property to have his to have a new like office, doctor's office, and he completed the purchase on X day, and the next day all the banks closed, the currency collapsed. So he was fine because he exchanged and completed the transaction the day before, luckily. But the person who sold him the property had money in the bank. Don't know exactly what happened. You know, he probably had to wait. And when he got the new currency, it probably wasn't worth, you know, as much as it used to be. But you know, that's what happened in Brazil in the late 80s. And I think, you know, 1994, I think they had the new currency in Brazil. But, you know, things keep going. One thing that a lot of Brazilians did was to have a hedge. And the hedge for Brazilians, and still nowadays, is to have US dollars. But if the dollar goes the way of, you know, a third world currency, what's the hedge? Well, I think the hedge is clearly hard assets, precious metals, you know, physical gold, physical silver, and of course maybe cash outside the system. Look at what happened in Puerto Rico. You know, people are accepting only dollars, like paper dollar. You know, I read something that people don't accept gold, but I think people would accept gold, you know, if you had gold. It's, you know, but credit cards, Bitcoin, all that is not being accepted because they've lost electricity. But anyway, all I'm trying to say is, yes, be prepared, but it's not the end of the world. So what about ICE9? Well, ICE9 is like, according to Wikipedia, is a fictional material that appears in Kurt Vonnegut's novel Cat's Cradle. So it says ICE9 is described as a polymorph of water, which instead of melting at 0 degrees, melts at 45.8 degrees centigrade, or 114 Fahrenheit. When ice-9 comes into contact with liquid water below 45 degrees centigrade, it acts as a seed crystal and causes solidification. So it freezes. It's a water that freezes everything, or as a material that freezes everything. It just freezes water. So Jim Rickards talks about ice-9 as the markets freezing, financial markets ceasing to operate and closing down. And the last time there was such an event was August 1914, when the global stock markets closed because of World War I. And there's an interesting little article here on globalfinancialdata.com. And it says, quite interesting here, never before had all of Europe's major exchanges closed simultaneously, but then again, never had such a global cataclysm struck the world. There had been crises before when the stock market in the US or other countries had closed, such as the 1848 revolution in France or the panic of 1873 in New York, but never had all of the world's major stock markets closed simultaneously. Let's have a look here. There's something else quite interesting here. It says, of course, to investors, not being able to buy or sell shares is even worse than selling them at a loss. Although stocks could not be traded on the main exchanges, over-the-counter markets replaced exchanges for those who were desperate enough to sell. So there are, people do. Human beings adapt. So people were selling on the curb or outside the exchange. And it says, although the NYSE was closed between July 30th and December 12th of 1914, stocks were quoted by brokers and traded off the exchange. Global Financial Data has gone back and collected stock prices during the closure of the NYSE to recreate the Dow Jones Industrial Average while the NYSE was closed. And it goes on to say, we collected the data for the 20 stocks in the Dow Jones 20 Industrials and calculated the average of the bid and ask prices from August 24th, 1914 to December 12th, 1914. And it goes on to say, few people realized that stocks in the US had already bottomed out and were heading into a new bull market when the NYSE reopened on December 12th, 1914. People realized that it was actually going to be a positive for the U.S. because the U.S. was not involved in the war. And it says, the market paused and it says, as the graph below shows, the Dow Jones Industrial Average almost doubled in price in the following year. Its bottom in November 14. The market pause then had another rally into 1916 before falling back once investors realized strong profits they had predicted from the war would not be realized. But at the same time, it says the NYSE reopened trading for bonds under restrictions on November 28th. The San Francisco Stock Exchange and Bond Exchange reopened December 1st. And it says the NYSE resumed trading at peg prices on December 12th, though the prospect of war profits soon made the restrictions irrelevant. So people realized, there is even a story from Jesse Livermore. He was at a train station and one of his friends dropped his hat on the platform and he picked it up and it had the initials WAR. His friend's initial, and it was war. And it was just before World War I. And Jesse Livermore took it as a signal to buy stocks. So the U.S. did well from that war because they didn't join the war until 1917, and they're providing all the war material, and even though they're neutral. So there are opportunities even, when there is calamity, so to speak. So now let's go to the pocketbook. And as I'm talking about ice-9 and market closure, I want to talk about, counterparty risk, because that's another problem. with the markets today, who you've got your money with, which broker or bank. You could be, or if you have an ETF as well, you could be doing really well and you've got the right position, but if your broker or the ETF provider goes bust, you've got no recourse, unless you're Goldman Sachs, who was on the right side of some credit default swaps, and their counterparty was AIG, was going to collapse. But, the U.S. Treasury made them whole, so Goldman Sachs got paid its profits. But if it wasn't for the government, Goldman Sachs would have lost, even though they bet the right way. So that's counterparty risk. But the U.S. Treasury or the U.K. Treasury, they're not going to come and bail us out. So that's why counterparty risk is so important. So I read here from page 11. Gold does not expose you to counterparty risk. Ownership of gold does not keep you awake at night wondering if your assets are safe in a financial institution that may or may not be trustworthy. Gold also provides safety against the fraud, poor management, and failure of financial institutions and companies that may impact your assets. Lately, there has been a lot of that to go around. Exposure of these failures is not optional. If you're a citizen, you're going to pay, even if you're not directly exposed to any financial institution. You will be charged through taxation, devalued currency, and asset depreciation. So, yeah, gold, I'm not saying you should have all your financial assets in gold. I personally have some of my assets in physical gold, but I also have financial assets, things like my pension, which I can't touch right now. I do have also some mining stock holdings outside my pension. And, you've got to, how can I say, calculate the risks yourself. Do what you think will keep you, will not keep you awake at night, as Jim Sinclair and Peter Carling say in their book. Would I take all 100% of my savings and wealth and put it with a broker? No. But a portion of it, to speculate if you want, or to get some dividends, or whatever you want to do, but have some physical gold and silver, and maybe even have some cash now. I was reading as well with the Equifax, hack scandal, and that's affected even the UK, many countries. There's talk that people are going to start going back to cash because a lot of times, through credit cards or debit cards, you pay everything online. There's a danger of hacking. So, yeah, that's what I wanted to talk about then. Financial collapse or financial mayhem, monetary mayhem. There might be prepared, it's always good to be prepared, even if it doesn't happen, you don't lose anything. Is it the end of the world? No way. Things keep going, and there's even opportunity. Look, what happened during World War I. Actually, U.S. investors ended up doing well. But of course, if your money is stuck in the stock market and the stock market closes for 6 months, there is a lot of anxiety and worry. You wonder if it's ever going to open again. So, you got to balance things out and, do what you need to do that makes you feel comfortable. And, don't put so much money that, it will affect you financially. So, and ICE 9, yes, it could happen, as we're talking. But even during ICE 9, people find ways around, the closure of exchanges, like trading off exchange. And the counterparty risk. Yeah, that's a huge risk. That prior to 2008, it wasn't something, I've worked in the city, started working in finance in the late 80s. Prior to 2008, the only really big event of counterparty risk was in 1995 when Barings Bank collapsed, you know, through the actions of Nick Leeson and his bosses. So, and back then, you know, he was a huge pariah, but now we don't even talk about Nick Leeson because the 08 crisis completely eclipsed him. But before, you know, before 08, 2008, counterparty risk was not something people worried too much about. So if you enjoyed this video, please give me a thumbs up, share it far and wide. If you haven't subscribed to the channel yet, please do. And you can also follow me on Steemit and on Twitter. And I'll talk to you later. Bye.